man. Not too bad.
Okay, so I'm going to record this session for future reference.
Yeah, sure, no problem. Is there anyone else that's going to be joining us, or is it just should I just dive into some stuff?
Okay, we can just dive into some stuff, and then if someone else would join, I can just accept them on this group.
Okay. Um, well, so just in case anyone, because it's being recorded, in case this gets sent to other agents that aren't on the call, let me just kind of reintroduce myself. My name is Joshua Hollman. I've been in lending for 15, actually 16 years now. I've been with Summit Funding for the last 4 years, and pretty much working with Ron and Eva, I want to say at least 3 of those 4. So we are an independent mortgage banker. So when it comes to lending, there's essentially 3 different types. You have your kind of depository banks, your big banks like the Wells Fargos, the Bank of Americas. You could even say, a Quicken Loan, some of those types of lenders. And they are what they are, right? They're big banks. They get thousands and thousands of applications. I think we all know kind of what Quicken's reputation is, right? They're just trying to get the simple deals. Really not a lot of high skilled loan officers in that kind of business structure. The big banks like the Wells Fargos, the Bank of Americas, I know, Eva might be able to attest to this, but a lot of times listing agents aren't too thrilled to work with them either, because there really isn't the personal care there. It's the turn times are really slow. I don't think they really can close in 30 days, especially in this competitive market. That's something you really need to do. So that's kind of one aspect of lending. And then you have your brokers, who are like independent workers, right? They work with multiple lenders. And one of the downsides that I used to actually work in the broker world as well. And one of the downsides to that is that you don't really have a lot of control over the file as far as knowing who the underwriter is going to be, knowing who the appraisers are going to get picked up, because you're just kind of a middleman between the borrower and the bank. And so a lot of times that can be frustrating for a purchase transaction where things might not go as smoothly, or that loan officer might not have a lot of pull to be able to make things happen if a file gets a little, difficult. And then for us, Summit, we are, again, an independent mortgage bank. We fund our own loans. We sell our loans directly to Fannie Mae, Freddie Mac, Sallie Mae, VA. So we don't have any layered guidelines, and we have complete control of our file. We have our own underwriting staff, our own appraisal staff, or panel of appraisers, I should say, that we contract to. So things we could really make the difficult deals happen. Not that we want all the difficult ones, but we're really set up well to assist agents in the purchase transaction. We're a purchase lender. So when it comes to closing on time, when it comes to communication, you're going to deal directly with me, with my team. And if I need to do something, I can call an underwriter directly. We can get in touch with the appraiser directly. It's kind of all in one house, and it makes the process a lot smoother than some of those other types of lenders and lending. Some of the basics when it comes to lending, really, we look at 3 things. We look at credit, we look at income, and we look at assets, right? For any applicant, any lead that comes in, those are the 3 main things we need to look at. We can't really issue an accurate approval without looking at all 3 of those categories. And if one of the clients or one of the borrowers that we have struggles with one of those categories, let's say they have good income, good credit, but maybe they don't have any money saved, right? And even with a down payment assistance program, which we have multiple options for that. They still need to have at least some semblance of money. And if that's something that they could work on, well, then we'll set them up on a path that says, hey, you need to save an extra, $3,000 to $4,000 to be able to qualify for this price range. Or we can even issue an approval if they are short on cash. In this market, it might be kind of tough, but we can issue that approval and just let you guys know, the buyer's agents, that, hey, they need a seller credit, which in this competitive market, that's really hard to go in with an offer asking for a seller credit right off the bat, right? So in other words, we are able to nurture some of these leads. Obviously, some of them are approved right off the bat. but some of them may need to work on certain categories, whether it's credit, whether it's, if it's income, maybe they need to add a cosigner, things like that. And we've done a pretty good job, I think, with servicing the leads that we get from home buyers and making sure that we're following up and nurturing those files that maybe aren't approved right off the bat. So, I would say, technically, I don't think from a realtor standpoint, you guys need to be going too deep into the lending world. I mean, you want to know some of the basics, right? If someone has, a recent foreclosure or a bankruptcy, things like that, that can kind of automatically disqualify someone from a qualifying for a loan. And for the most part, I'd want you just to refer that stuff to me. If they have questions or if your clients have questions, just say, hey, let me get you in touch with our preferred lender and he'll answer all the questions. That way it takes a lot off of your guys' plate. And you don't have to maybe, feel like you need to know all the lending guidelines. What else can we talk about there? So, I mean, that's kind of the basics when it comes to what we need to look at for someone that's trying to qualify for a home loan. I actually kind of want to open it up to some questions. I'm curious as to what some of the agents are, what kind of questions they're asking the potential buyers. When you guys, Mokum and Esteban, when you guys are like getting a lead, is your focus on just trying to get that meeting and meet them at a house?
Yeah, pretty much my focus, like, kind of right now is like, the first thing kind of what I ask is try to get the lending part of it outside, like, kind of out of the way. Because if they're not really ready to buy a house yet, I kind of want them to, usually what I want to like have them get ready for is, get a pre-approved and, kind of go after that. And then I kind of go after like, I kind of know that how motivated they are. If they do it within a week, if they do it within 2 weeks, if they're doing it really quickly, I know how motivated they are and I know where to put them, in my A scale with B scale, C scale, whatever it may be. That's kind of how I do it. But yeah, mostly try to set an appointment.
Yeah, because that appointment's key, right? Like just getting
Yeah.
to meet them and start to build that connection. I mean, I'm not sure exactly what the model is, if there's like a certain rule that you guys use as far as how Ron is setting up his team with you guys, but like I know some other teams that I work with where their main focus is when they first get that lead, they're like, hey, let's just meet them. Let's not bog them down with lending questions. And sometimes, it could be a waste of your time if you meet someone and then you find out they tell you, oh yeah, I don't have a job right now, or something like that, where it's just obviously that wouldn't be a good lead. But I think they're reaching out to you guys because they want the tangible thing. They want the house, right? And so for you guys to be able to at least meet that person, build some sort of connection, ask them good questions, right? Like simple questions get simple answers, right? So if you're digging a little deeper, even as simple as asking them, why do you want to buy a home? And it might seem obvious, but some people may have other reasons, right? It might be because they are currently renting and they're the owner of the home, the landlord is selling the house and they have to be out in 30 days. Or maybe they give you a story about how they've always had a dream of owning their own home and they want to be able to make whatever modifications they want to it, or they're sick of paying rent and they're losing all kinds of money. I mean, whatever the story is, then you can kind of like dive a little deeper with them and get to know them a little bit better. I think that's one of the main goals for me this year, is to figure out how to ask enough questions to get to the real reason why someone wants to do something, and maybe what their concerns are, right? Like, hey, what is your concern about this? What's a major concern you have about this big process that you're starting up right now? You let them know, like, hey, this is, buying a home's a big deal, right? It's for most Americans, the majority of Americans, it's the biggest purchase they'll ever make. It's the largest amount of debt that they ever take on. And with that, if we can convey that we understand that could be a scary thing for them, or they might have some hesitations, and just try to figure out what that is. That way we know how to fix it, right? How to make them feel more comfortable and feel confident in us, in the lending side and the real estate side. I think that's the key to help convert a higher percentage of the leads we get. Because there's two ways to to do this business, right? There's either you convert the leads you get at a really high level. So if you get, 10 leads a month and you close 5 of those 10, your 50% conversion rate, you're killing it. But if out of those 10, you're only closing 1 and you say, hey, I want to close 3 or 4, then you either need to up your conversion rate and build that connection or get more leads and use the current conversion rate you're at. So it's kind of, we got to figure that out, right? I think one of the common things to touch upon for me, and this is something that Cynthia actually asked me the other day, because she had a client or has a client right now that is pre-approved with Quicken Loans. And she's trying to get that buyer over to me and she's like, what are some of the things I can tell them, to try to get them to switch lenders? And here's kind of my pitch for that, which is true, I believe. It's not just a sales pitch. Reputation in a local market absolutely matters, right? Homebuyers Realty has a great reputation. Ron and Eva have built up their business and their reputation over, I think, 20 plus years. So number one, that a buyer using Homebuyers Realty, when they put that offer in, the listing agent is going to recognize that name most often, right? So reputation of that matters. And then when it comes to the lending side, especially in this competitive market, right? We have low inventory, still a ton of people that want to buy, hardly any homes for sale. So these sellers and these listing agents can be pretty choosy with what offer they select, right? So if our buyers or your buyers are using a lender that, number one, doesn't have a very good local presence or reputation, or has potentially a bad reputation like Quicken Loans. I know almost every real estate agent I've talked to has had a bad experience at one point working with Quicken Loans, where they didn't have the communication or the deal fell through or things of that nature. And listing agents know that as well. They probably have bad experiences. So having someone that they can refer on a local basis, that we do have a good reputation. I may know the listing agent that you're putting the offer on, right? Sometimes that literally is the reason someone got their offer accepted or not, is, hey, I know that they offered maybe $5,000 less, but I know Josh, I know Summit, his team is going to get it done if they say they can do that. I know Ron, I know Eva, I know Cynthia or Yolanda, I've done business with them before. So a lot of times what I explain to clients is, we want to try and be as competitive as possible and put your offer, shine the brightest light on it. And here's the ways we can do it: local reputation, having someone that you can communicate with on a consistent basis, and someone that's going to consistently communicate with that listing agent to make them feel at ease, because it's a big deal for the listing agent, right? They want to make sure it goes smooth. I think that's a huge selling point for you guys, to be able to get leads over to a lender that you feel super comfortable with, and know that we're going to work hard to make sure that deal closes and we give them a good experience, right? I think that's the key, is for our clients. That one client can turn into a client for 20 years if we give them a good experience. We ask them for more business. We ask for their friends and family referrals. So that's kind of what my team is focused on, is just making sure that the entire loan experience and purchase experience is anxiety-free. It's and they get what they want, and they don't have to stress over this huge endeavor that they're taking on. So
It's very
yeah.
insightful, Josh.
I feel like I'm just talking. Anything, you guys have any other topics or anything that maybe you have questions about that I can help answer?
Yeah, let's do some Q&A. Steban, Malcolm, do you have any other questions for Josh?
No, I don't have any specific questions. Maybe on the go, once I get more clients, I can let you know.
Okay.
That's about it.
Sounds good.
Yeah. I mean, I guess, I don't know, we could talk for days on end about loans and different loan programs. I mean, we do have down payment assistance. We use CalHAFA, which is, these are obviously for a lot of first-time buyers that don't have a ton of cash. Minimum credit score, if we're going FHA, is a 660 credit score. But the downside to CalHAFA is that you have a max debt to income ratio of 45%. So a lot of times that limits the max purchase price that a buyer can get approved for. So the program that we more than often use is called our open door down payment assistance program, which only requires a minimum 620 credit score. Interest rates, there's a give and take. The interest rates aren't that great, but there is no max debt to income ratio for an FHA loan. There is no max income limit. And it's a grant. You get a second mortgage as part of the assistance, a silent second, and the other portion is actually a grant or a gift that they don't have to pay back. So a lot of clients, we end up pushing that file forth because it's a little more lenient and it accesses a higher purchase price for them. So there's literally been,
so on this, Joshua, a couple of questions. So I know I did send you a couple of clients before, maybe by Paul. If you can go back and kind of try to get him approved again.
Paul,
I'll give you a call back after this.
Okay, yeah, or shoot me a text.
Yep.
Yeah, we could definitely look into it. I mean, for the most part, if we take an application and we can't qualify them on the spots because one of those three things is off, right? Maybe he didn't have a 620 credit score. Maybe he didn't have enough income to qualify for, a house that is worth shopping for. I mean, sometimes folks, technically they may qualify for like a, $200,000 house. And then they're like, oh man, I'll just wait, or I'll got to figure something out. One thing I do want to stress to you guys though, and hopefully on the recording, if this gets played back, interest rates can easily at some point this year be up over 5% the way things are going. So if you are working with clients that are on the fence, or maybe they're being a little picky with what they're shopping for, let them know like, hey, the time is now. I don't see prices necessarily falling off. I still see we have an inventory issue. Prices won't drop until there's more inventory, right? Or the demand somehow goes down. Now, rates going up could price some people out. It could lessen the demand a little bit, but the crazy part right now is that rates have gone up and we still haven't seen the demand really fall off. So our average loan amount is 400 that I did last year personally was a $400,000 loan amount, not purchase price, but loan amount. A 1% difference from rates, like if rates went from a 3.8, 3.9 to a 4.8, 4.9, it's about a $250 difference per month. So if someone's, especially a first-time buyer that is payment conscious, they want to try and keep their payment as low as possible. If they wait or put things off and thinking that the market's going to go down in the summer, or they could be putting themselves in a worse position where they, number one, wouldn't qualify for as high of a purchase price, or their monthly payment's just going to be, an extra $250 of interest that's going to a bank and not going to their pocket. So I would sell with a little bit of urgency right now with some of the clients that you are working with to tell them like, hey, look, let's get on the ball and lock something in before potentially the investment could be a little bit worse for you down the road.
Okay, sounds good. Sounds good.
Cool.
Yep. Thank you so much, Josh, for your time today. Do you have anything else to add or worth mentioning?
We do have a program for that we just rolled out a couple weeks ago for, and I just shared it on my Facebook page for Teachers Association. We're offering $1,000 lender credit for any California teachers. So that could be something you guys can use as well to promote, just as a little, clickbait, something to get them to inquire about purchasing.
Okay, great. And also, I can ask your assistant, Jessica, if she could provide some sort of flyers that we can distribute to the team. Is that okay?
Yeah, put them on your social media. That's all good. And just for future reference, I love doing this kind of stuff, especially if we can gather up, more of the team, doing, certain Q&As like this, and we can maybe in future calls have it be more specific about certain things, not just a broad stroke of, all that's in lending. We can talk about the market. We can talk about maybe what we can do to help structure offers to make them stand out from a lending and real estate perspective on how we can work together. So, I'm sure Ron would, be open to that. So if there's any other calls you guys want me to jump on and maybe have themes for that call, so it's a little more intentional, I'm open to that.
Yeah, we will definitely invite you to some of our future team meetings.
Perfect.
Could be like once a month, something like that.
Yeah. Perfect.
Thanks a lot, Josh, and we appreciate your time.